Fox just dropped its latest quarterly earnings, and wow, on the surface, the numbers look fantastic. But when you dig a little deeper, there's a really fascinating story here about strategy, big investments, and a major bet on where media is heading. So let's break it all down.
So the whole story really kicks off right here with this number. Wall Street was expecting earnings of about 51 cents per share. Fox rolls in with 82 cents. Now that's not just a beat, that is a blowout. It definitely turned some heads.
All right, so first things first, let's take a look at these headline numbers, just to get a sense of how strong this quarter really was.
And it wasn't just the earnings per share that crushed it. Nope, revenue also came in hot, beating what analysts expected by more than $122 million. So you've got a really strong top line and an even stronger bottom line. That tells you something is clicking, and clicking in a big way.
This, of course, leads to the billion-dollar question, right? How on earth did they do it? What's the secret sauce that's driving all this momentum?
Well, the first and honestly the biggest piece of this puzzle is Fox's complete dominance in live content. In a world where we can watch almost anything on demand, live events are still king for advertisers, and Fox is cashing in, big time.
Hey, don't just take my word for it. The CEO, Lachlan Murdoch, said it himself. He called the ad market the most robust they've seen for some time. I mean, that is a huge statement of confidence, and it points right to the health of their main business.
And just how robust was it? This wasn't just a good quarter, it was a record-shattering one. They had their highest ad revenue ever for the NFL regular season, highest ever for the MLB postseason, highest ever for college football, and even the highest second quarter ad revenue ever for Fox News. Just a total blockbuster across the board.
If you want just one number that shows you the sheer power of Fox's audience, this is it. Scatter pricing, that's basically the last-minute ad spots, was up 46% at Fox News. That signals incredible, off-the-charts demand. Advertisers were basically lining up to get in.
But hold on, this isn't just a story about good old-fashioned broadcast TV. Not at all. Fox is also making some really smart, aggressive moves in the digital world, and that's the second pillar of their whole strategy. Let's talk about Tubi, their free streaming service. The thing is on an absolute tear. Total viewing time is up 27% from last year. It was their most streamed quarter of all time. But here's the real kicker. For the second quarter in a row, it was actually profitable. Tubi isn't just a potential growth engine anymore, it's making money. So it helps to think of their digital strategy as having two parts. On one side, you have Tubi. That's your free, on-demand library, just a massive collection of movies and shows. Then you have Fox One. That's their newer subscription service. And it's all about what they do best, live news and sports, beamed right to you. And even though it's only been around for 5 months, we can already see what's clicking on Fox One. No surprise here, 2/3 of the viewing is sports, and the other third is news. This is proof that their biggest strengths on broadcast are translating directly over to their streaming platform. Okay, so revenue's up, ads are booming, digital's growing, everything seems perfect, right? Well, here's where the plot thickens, because despite all that incredible news, their overall profits were actually down. So what's up with that?
First, let's just reestablish the facts. Total revenue grew year over year. That's a check. It went from just under $5.1 billion to almost $5.2 billion, a nice, solid increase.
But then you look at this. Their adjusted EBITDA, which is just a fancy way of measuring operating profit, it actually fell. So you have this paradox. More money is coming in the front door, but less profit is coming out the back. How does that make sense?
Well, this isn't a sign of trouble, it's a sign of their strategy. The profit drop is really because of two big things. First, they're paying more for those premium sports rights, the very content that's driving all that ad revenue. And second, they're intentionally spending money to grow Tubi and FOX One. You know the old saying, you gotta spend money to make money? So, all of this brings us to the final piece of the puzzle. Where does Fox go from here? How do all these investments and strategies fit into their long-term vision for the future? Right, so in this crazy media landscape with all this heavy spending and changing viewer habits, what exactly is Fox's game plan to stay on top?
It seems to boil down to three main things. First, they're leaning into the new world of smaller, so-called skinny bundles. Second, they are all in on returning cash to their shareholders. And third, they are doubling down, tripling down on what they do best, their core brands, live sports and news.
And when I say they're serious about returning capital, I mean it. Check out this number.
They've bought back 8.4 times billion dollars of their own stock since 2019. That's more than a third of the entire company. That's a massive vote of confidence in their own strategy.
So you hear this term skinny bundle thrown around all the time. What is it? Well, think of it this way. Instead of the old giant cable buffet where you got 500 channels you never watched, providers are now offering smaller, a la carte menus. It's a huge shift in the industry.
And while some media companies are kind of terrified of this whole trend, Fox actually sees it as a positive. And the reason is pretty smart. It's because of how their distribution deals are structured. They've basically built in downside protection, so they're well-positioned no matter how things shake out.
So there you have it. That's the story of Fox's quarter. They're using the incredible profits from live TV to fund their digital future and reward their shareholders, all while navigating this crazy changing TV landscape. It leaves us with one massive question. In a world that's sprinting towards on-demand everything, is Fox's all-in bet on live events a strategic masterstroke, or is it a massive gamble? I guess only time will tell.